Good morning and thanks so much for tuning into the trade setup. I'm Neeraj Shah. Let's take stock of the global news flow first. McCarthy vows that he'll work through the long weekend on the debt deal that is of imminent mm, importance for the US predominantly, but also for the world markets because everybody talks about that being the make or break in the near term. Oil prices fall after Russia played down the prospect of further OPEC plus production cuts in the meeting next week. Tokyo inflation has slowed, supporting BOJ's price view for now. That should help the Japanese markets for sure, and maybe some of the other Asian markets as well. China easing bets, the bets for China easing climb to the highest this year as growth sputters there. And frankly, you have to look at the Chinese growth and wonder what happened to all the promise that was there around the reopening. It's done its bit, but it's now kind of faltering away. The US markets had a good session, by the way, overnight. So keep that in mind, especially the NASDAQ, 1.71% higher. But the Dow and the S&P futures are currently trading very, very flat. So no great cues percent. Remember, we knew of the NASDAQ futures being up 1.7% even during our trading day yesterday. It didn't help our markets. Very unlikely that the past post performance or the fact that the US futures are down currently will help our markets very much on the first day of the new series. The SGX Nifty, therefore, is indicating a start which is in the red. So, what's the trade setup, therefore, for the day? I would suspect that the NASDAQ rally is unlikely to spur gains at the start of the June series. The US debt ceiling impasse or the resolution would likely remain the key factor for equities in the new series. Select pockets like real estate plus hospitality, as well as hotel stocks, are shining on even higher ARRs in the holiday season. Aside of that, from a pocket perspective, it's not very easy to now give a trends. There are very few which are kind of showing a move uh, in tandem, and hotels or hospitality probably remain that pocket. It's a busy day from an earnings perspective as well. Three large ones or four large ones, ONGC, Mahindra and Mahindra, Sun Pharma are amongst the ones to watch out for. There is also Samvardhana Motherson, BHEL, Chambal Fertilizers, BEML, and to an extent PNC Infratech would be important, Info Edge would be important, and Sri Renuka Sugars, in line with the fact that most of the global market or most of the global sugar prices are looking very, very wobbly. Sugar prices have certainly come off after the Brazilian crop has looked good. So, therefore, the likes of Triveni Engineering and Sri Renuka Sugar become important. What about stocks to watch at open today? I'll start off with the two weak ones. And Z Entertainment is the first one. Revenue is down 9% at 2,112 crores. The Bloomberg estimate was 2063, but it's the EBITDA performance and the loss performance which will worry the street. So EBITDA margins at 7.18 versus 22.63. The estimates were 12.9%. Net loss coming in at 196 crores versus estimates of 112 crores profit on Bloomberg. And remember, there is a loss from discontinuing operations, which is, of course, normal loss. And there is an exceptional loss of 89 crores or 90 crores. Even if you strip that out, it is not a great number from Z Entertainment. I would suspect that there would be a bit of a downtake in the session today. Dart has an interesting note on Z, and I thought amongst the ones that I noticed, this one kind of hit the nail on the head. They have a buy with the target price of 245, but look at the comments per se. They're saying it's hitting new lows, and the merger is the key trigger and hope. The core ad revenue for FY23 too has declined 8%. The recent NT order directing exchanges to provide fresh NOCs to the merger approval has increased the risk of a delay or a collapse of a deal. Now, my conversations with legal experts suggest that a collapse of a deal is not imminent, a delay most certainly. They reduce the EPS estimates by 11 and 10% for 24-25 to factor in the subdued growth as well as the delay in the merger. Suffice to say, Z will have a tough start today. Page is the other one which might have a tough start today. Revenue is down 12.78% at 969. The estimates for 1163. It's a wide miss there. EBITDA down 49% at 134 crores. The estimates were 206 crores. So not only is the revenue soft, but the margins are soft as well, even relative to estimates. 13.86% margins must be the lowest that Page has clocked in some time now, as a result of which the net profit is down 59% to 78 crores. The Bloomberg estimates were 136 crores. This is the other one, which I'm pretty sure will have a bit of a slam dunk at the start today. Then some good numbers. So these are the headline numbers. Now let's divide between the good, the bad, and the difficult to assess. So the good numbers, Met Plus, I thought was a good set of numbers. Revenues were up 30% at 1253 crores. The estimates were 1242. EBITDA margin 6.5 versus 5.8. Net profit up 127% at 27 crores. I thought the numbers looked okay. Let's see if there's a bit of a reaction there. Mrs. Bector's good numbers. Revenues up 37% at 346. The estimates were 341, so in line. But the EBITDA numbers were better. Look at that. Revenue was up 37, EBITDA up 49%. 68 crores versus 44 crores. EBITDA margins 19.85 versus Bloomberg estimates of 13.1. They really came in better than Bloomberg estimates, but better than the corresponding quarter last year as well, which is a good thing. And the net profit up 171% at 27.65 crores. The estimates were 22 crores. So good performance there from Mrs. Bector. Food specialties may react a bit. It's not as liquid as some of the others, but could react. AI engineering came out with good numbers as well. Revenues up 16% at 1273, in line with estimates. EBITDA margins, though slightly better than estimated, 24.79 versus 23.4. Actually, it's 150 basis points beat on the estimates. And net profit at 267 versus estimates of 238. I suspect that this too could be taken well by the street. Sale on expected lines, though, revenues down 5%, EBITDA margin collapse, net profit down 53%. Wouldn't surprise any of the people on what Sale has done, because just look at what the peer set has done, pretty much similar. GSFC has had a bit of a rally, and these numbers won't help because the numbers are wobbly. 17% uptick in revenue, yes, but the EBITDA down 22%, margins collapse completely, net profit down 21%. Not a great number, may react a little bit. Now, the others have a bit of a mixed bag performance, and hence it becomes a bit tricky, if you will. So, GMM Fodler, revenues up 23% at 865, the estimates were 812. EBITDA up 33% at 96 crores, the estimates though were much higher. EBITDA margin at 11.1% versus estimates 14.9%, lower than estimated, even though better than the corresponding quarter. And net profit, though, at 38 crores versus 43 crores. Now, keep in mind, there is a lower deferred tax outgo, 1 crore versus 23 crore YOY. So that helped shore up the net profit and look better. But if you strip out that, and if you take into account the lower tax outgo, then the net profit number would not have been so close to the Bloomberg estimate. It would have been much lower. So hence the pickle. I suspect that this should be not taken all that well, but let's wait and watch. Emami is the other one. Again, revenues up 8.8% at 835, better than estimated. Net profit, though, down 60% at 141 crore. The estimates were 146 crores. Now, this is also because Q4 had benefited from MAT credit entitlement of 287 crores, and which is where the net profit looks at large 60% downtick. But if you account for that, then the number is not as bad, and it's very close to the Bloomberg estimate. And hence, I'm saying, not quite sure whether the street will take this negatively, or will the street look at the EBITDA margin beat relative to estimates and take it positively. Remains to be seen. Triveni Engineering, the reported PAT looks up 86%, which is a great number. Revenues up 53%, a great number. But margins slightly lower than estimated, and sugar prices across, like I said, the global sugar prices have come off, and that might actually impact the stock today. So these are a few which are a few imponderables, if you will, for me at least in the session today. Then greed and fear portfolio changes are important. Chris Wood's portfolio, he's written a very long note on India's election outlook, and of course the relative changes in the portfolio. Now, we're not bringing in the election outlook number or his views on what's happening in the current on the political side, but on the equity side, the HDFC Life Insurance has been removed in the Asia ex Japan long only portfolio. It's been replaced by SBI Life and Zomato, I presume, also introduced there in the Asia portfolio. Investments in Bajaj Finance, Godrej Properties, and Macrotech will also be increased by 1 percentage points. But the investment in Zomato will be added to the global long only equity portfolio as well. And an investment in Zomato introduced the 4% weighting in the India long only portfolio as well. HDFC Life removed, and some others have been tinkered with. I don't think the tinkerings make as much difference, but the fact that one, HDFC Life Insurance removed from the portfolio and Zomato introduced. Now, I mean, it's a sell side benchmark portfolio, not nowhere close to MSCI, of course, but Chris Wood and Jeffries is a decent name, and therefore, if you see a reaction in an HDFC Life or Zomato, you would know, or you should know, why it's happening. A bunch of conversations lined up, of course, today on BQ Prime, starting with Vineet Sambre. of DSP Asset Managers at 10 a.m. He's a maverick when it comes to small cap names for sure. It'll be interesting to talk to him about how is he seeing the equity prism currently. TTK Prestige has been downgraded. The numbers weren't the best. TT Jagannathan Johnson at 11:30 to talk about those numbers. Gokaldas Exports, always an important number to understand from the Indian textile exports perspective. And Mr. Ganpati would be joining in at 12:15 to talk about those. Then yesterday's big winner, Aptech, uh, had a spectacular quarter. Anil Pant Johnson to talk about what went right for them. MedPlus, like I said, had a good quarter according to me at least. And Mr. Madhukar Johnson at 2 p.m. And Shishir Joshipura of Praj Industries will talk about Praj's numbers. They came out during market hours yesterday, but at the start of the year, it'll be interesting to understand from Shishir about how is it that he foresees FY24 to be like. So lots of conversations lined up on BQ Prime. There's also Insight. And viewers, I urge you to log in today at 1 p.m. to hear what Bajaj Auto and Nirav Sheth have to talk about when it comes to the two-wheeler space. I think it promises to be a very interesting conversation. You might want to log in for that as well. Thanks so much for tuning into the Trade Setup. If you don't see me again, have at least in today's session, because you might not be logged in for the interviews. Have a great weekend, and I'll see you Monday morning with Trade Setup.